Hey tech enthusiasts, buckle up for your daily dose of market movers and shakers on the Tech Stocks Daily Podcast. In today's Tech Spotlight, we're diving into the Apple-scented news that's making waves across the digital ocean. Apple, in a strategic pivot influenced by the European Union's new digital competition rules, the Digital Markets Act, has taken a decisive step by allowing Epic Games to reintroduce Fortnite via its own app store on iOS in Europe. This decision comes after a period of tension that saw Apple withdrawing Epic Games' developer account amidst a public spat over App Store fees and alleged anti-competitive practices. The reinstatement signifies a remarkable shift in Apple's stance, influenced by the EU's steadfast dedication to ensuring fair competition and innovation within the digital domain. The reintroduction of Fortnite to iOS within Europe is not just a win for Epic Games, but a loud message to developers and industry stakeholders about the EU's capacity and willingness to enforce DMA and challenge the status quo of digital gatekeepers. This move underlines the initial challenges and adjustments global tech giants may face in aligning with evolving regulatory landscapes, particularly in regions asserting stronger digital governance frameworks. Apart from this, Apple is not just making headlines for its skirmish-turned settlement with Epic Games, but also for its forward-facing approach to accessibility and inclusivity within its ecosystem. The anticipated iOS 18 and macOS 15 updates are rumored to be packed with advanced accessibility features designed to make Apple's devices more user-friendly and accommodating for individuals with varying needs. From adaptive voice shortcuts that allow custom-spoken phrases to trigger specific accessibility settings to the introduction of an on-device eye tracking feature, Apple is pushing the envelope in making tech more inclusive. However, it's not all smooth sailing in the Apple universe. The tech titan, while begrudgingly allowing users in the European Union to download apps from alternative stores, has introduced a stipulation that underscores the tension between compliance and control. Users stepping outside the EU can download apps from these alternative marketplaces, but will face a restriction on app updates if their travel extends beyond 30 days. This maneuver by Apple highlights the complex dance between adhering to regulatory demands and maintaining a semblance of its ecosystem's integrity. Through these developments, ranging from reconciliations with Epic Games to expanding the horizons of accessibility and navigating the nuanced requirements of the DMA, Apple illustrates its adaptability and enduring influence within the tech landscape. The tech giant's maneuvers, whether viewed through the lens of regulatory adaptation, inclusivity efforts, or strategic restrictions, underscore a broader narrative of evolving digital ecosystems shaped by innovation, regulation, and the perpetual pursuit of a balance between user freedom and platform integrity. Microsoft has been making headlines for two major reasons recently, demonstrating its significant presence in both the cloud computing arena and cybersecurity landscape. First off, Microsoft is under fire from CISP, a trade body backed primarily by Amazon, for allegedly exploiting its dominant position in the cloud sector through Azure, its cloud computing service. CISP accuses Microsoft of manipulating its software licensing terms to undermine the competition by increasing costs for deploying Microsoft software on rival cloud platforms, such as Amazon AWS, Google Cloud, and others. This move, according to CISP, led to a staggering 300% increase in revenues from Microsoft products for one-member firms since 2018, but resulted in a drastic drop in profit margins, from positive mid-20s percentage points in 2018 to negative double digits in 2023. This issue has escalated to the extent that the European Commission is currently scrutinizing Microsoft's practices to assess their compliance with competition laws. The second major headline involves ongoing cybersecurity concerns. Microsoft has reported that Nobelium, a Russian state-sponsored hacking group, also known as Midnight Blizzard, and responsible for the SolarWinds attack, is actively attempting to compromise Microsoft's systems. This group had initially gained access to Microsoft's core systems by targeting the email accounts of some of its top executives. The attack, which began just days after Microsoft announced a major security overhaul for its Azure cloud services, is currently ongoing. Despite the infiltration, Microsoft assures that no evidence suggests any compromise of customer-facing systems. However, the company is actively contacting affected customers to aid in mitigation efforts. These incidents underscore Microsoft's pivotal role in both the technology and cybersecurity domains, emphasizing the company's continuous challenge in navigating the competitive landscape of cloud computing while bolstering defenses against state-sponsored cyber threats. Today, CrowdStrike Holdings took the spotlight for a significant flurry of options activity, catching the attention of investors and market analysts alike. There was an unusual volume of bearish sentiment among deep-pocketed investors towards CrowdStrike Holdings, as noted by Benzinga's options scanner. The move is a notable one, given that it points to expectations of something significant on the horizon for the company. From the data gathered, It became evident that there's a divided sentiment in the market, with 35% of the notable options showing bullish tendencies, while a more significant 64% displayed bearish sentiment. Specifically, the activity involved 14 extraordinary options trades, consisting of 7 puts and 7 calls, valued at $505,555 and $360,768 respectively. This activity suggests a keen investor interest in CrowdStrike holdings, with positions ranging between $290 and $380 for the company's stocks. The volume and open interest in these contracts provide crucial insights into the liquidity and investor interest at specific strike prices, reflecting strategic bets by investors on the company's future performance. This sudden peak in options activity, especially with a bearish lean, could imply anticipation of market-moving news or a shift in the company's fundamentals. CrowdStrike, known for its cloud-based cybersecurity solutions, operates in a highly competitive sector that is critical for the protection of global IT infrastructures. Its flagship Falcon platform is designed to deliver comprehensive cybersecurity across endpoint, cloud workload, identity, and security operations. Founded in 2011 and going public in 2019, CrowdStrike has positioned itself as a leader in the cybersecurity space, which only adds weight to the significance of the observed options trading activity. Interestingly, despite the bearish tilt in options activity, expert ratings over the last month have pegged the average target price for CrowdStrike stock at $388.4, which is indicative of a positive outlook on the company's valuation by some analysts. In the fast-paced and often unpredictable world of tech investments, moves like the significant options activity observed for CrowdStrike holdings serve as a pulse on investor sentiment and market expectations. As such, these developments are not just critical for investors, but also provide a broader insight into the potential headwinds or tailwinds facing leading tech companies today. Block Inc., formerly known as Square, is riding a wave of optimism and investor confidence, soaring 22% in February alone. The fintech giant has turned heads with its fourth-quarter triumphs and forward-looking 2024 guidance that has analysts and investors alike buzzing with excitement. This resurgence isn't merely by chance. Block's dedication to design, innovation, and meeting customer needs has cemented its position in the digital payments realm. Yet, despite its robust revenue growth, profitability has been elusive, leading management to refocus on core activities and efficiency. In the fourth quarter of 2023, Block reported a 24% year-over-year revenue increase, with a notable jump in gross profit and a slight improvement in operating loss. CEO Jack Dorsey emphasized the company's commitment to a lean operation and better resource utilization. The enthusiasm doesn't stop there. Wall Street is taking notice, with Wells Fargo's analyst Andrew Bach upgrading Block's stock from hold to buy and hiking the price target by a staggering 46%. Bach lauds Block's reasonable valuation and clear growth strategy. Meanwhile, Zacks Investment Ideas sees Block as a contrarian, deep-value tech play. Despite its falling out of the limelight, the company's sales and earnings growth forecast paint a bright future. With analysts upgrading their expectations and the stock trading at a significant discount compared to historical levels, Block appears primed for a major bull run. What do you think? Is Block Inc. set for a comeback, or is there more turbulence ahead? Share your thoughts and insights in the comments below. Let's dive into this fintech saga together and see where the journey takes Block next. Heading into the upcoming week, the tech market presents a fascinating mosaic of optimism, challenge, and strategic maneuvering among some of the biggest names in the industry. Here's a roundup of the insights that could shape market expectations. Apple is demonstrating notable adaptability and strategic foresight, especially in the European market. Its decision to allow Epic Games to reintroduce Fortnite via its own app store in Europe signals a willingness to adjust to regulatory pressures while maintaining its stronghold. The anticipated updates aimed at enhancing accessibility and inclusivity within its ecosystem could further bolster Apple's reputation and consumer appeal. Microsoft, on the other hand, is facing a dual front of challenges. Accusations from CISB about exploiting its dominant position in the cloud sector could lead to regulatory scrutiny. Simultaneously, the ongoing cybersecurity threats from Nobelium highlight vulnerabilities that could impact customer trust. How Microsoft navigates these issues could significantly influence its market standing. CrowdStrike is experiencing a whiff of bearish sentiment among investors, underlined by a noteworthy volume of bearish options activity. This sentiment suggests that the market is bracing for potential news or shifts in the company's fundamentals, indicating a period of uncertainty for CrowdStrike. Block Inc., formerly known as Square, is riding a wave of optimism, with a 22% surge in February and positive analysts' outlooks bolstering investor confidence. This heightened attention, fueled by its quarterly triumphs and forward-looking guidance, positions Block Inc. as a company to watch for potential continued growth. The overall market sentiment varies significantly, with each company facing its unique set of challenges and opportunities. Apple's strategic adjustments and focus on inclusivity, Microsoft's balancing act between cloud competitiveness and cybersecurity, CrowdStrike's uncertain investor sentiment, and Block Inc.'s buoyant growth prospects are all critical narratives to follow. These dynamics suggest a market environment that is simultaneously ripe for innovation, subject to regulatory impacts, and vulnerable to security threats. As the tech industry continues to evolve, these factors will play pivotal roles in determining market directions in the week ahead. Today's tech market activity presented a colorful tapestry of challenges and triumphs across several major firms, showcasing the dynamic nature of the tech industry. Apple exhibited resilience and adaptability in the face of regulatory changes, notably allowing Epic Games to reintroduce Fortnite to its European App Store, signaling an effective response to the EU's Digital Markets Act while maintaining strategic control. Microsoft, however, navigated troubled waters with dual challenges in cloud computing and cybersecurity, facing accusations of unfair practices in the cloud sector and battling cybersecurity threats from the Russian state-sponsored hacking group Nobelium. CrowdStrike experienced bearish sentiment among investors, indicated by an unusual volume of bearish options activity, suggesting anticipation of impactful news or shifts in the company's fundamentals. On the brighter side, Block Inc. soared with a wave of optimism and investor confidence, highlighted by a robust 22% surge in February and bullish forecasts from financial analysts, despite past concerns about profitability. Overall, the market sentiment today was a blend of regulatory challenges, cybersecurity threats, and investor skepticism, balanced against strategic adaptability, positive financial outlooks, and innovation. As we move into next week, the tech market promises continued intrigue with each company facing its unique set of challenges and opportunities, showcasing the ever-evolving landscape of the tech industry. Don't forget to like, subscribe, and share this video with others. Make sure to return on Monday for another insightful video that dives into the latest in tech news. Have a great weekend, everyone.